If you're looking for a happy retirement, an IRA, an individual retirement account, is the perfect pension to get you there. There's a reason IRAs are one of the most popular ways to save for retirement around the world, especially in the US. And they also exist in Germany. But how good are German IRAs compared to their US counterparts? That's what we will see in this Perfect Pension video. If you ask Perplexity, which is an awesome AI research assistant by the way, about IRA facts, it tells us that there are different types of IRAs. A traditional IRA is very similar to our German base pension in level 1. And the Roth IRA is very similar to our private pension in level 3. We have videos about all of these already in case you want to go into detail. And we have a video about the famous 401k pension as well, which would be the company pension here in Germany. So now that we know what we're actually talking about, let's see how good our German pensions are compared to the US brothers. So you know which pension is the best for you. And if you would like some help in setting up any of the pension schemes that we're about to see, feel free to book a free meeting with us right here. Even if you're a US citizen, because no matter what you have been told, you can invest in ETFs here in Germany as well. As pensions are an awesome way to invest in ETFs with tax advantages, let's talk about taxation first. Perplexity says that contributions to a traditional IRA are tax deductible, which means that you have to pay taxes in retirement. You didn't think Finanzamt would let you go without paying any taxes, did you? Here in Germany, singles can invest more than 26,500 euros a year and married couples twice as much, so up to 53,000 euros a year, which is a lot of money and a lot of taxes that you can save. If your taxable income is more than 62,810 euros in 2023, you pay 42% in income tax. That's not fun, is it? But that means you can deduct the investments to your level 1 pension also with 42%. That is fun. So for every 1,000 euro you invest in ETFs inside your base pension, you get 420 euros from Finanzamt when you file your taxes. Now tell me again that your little ETF savings plan in your investment account is the best thing in the world when you have to pay 100% of the bill while you get a 42% tax benefit with a level 1 pension. Of course you have to pay taxes later on in retirement if you get tax benefits while you contribute over the next 20, 30 or 40 years, depending how old you are. The idea here is that probably 99% of you will have a lower tax rate in retirement than you do right now, which means you can offset your investment now with 42%, while you may have to pay 20% in income tax in retirement, giving you an additional 20% tax benefit. The Roth IRA gives you tax benefits as well, but the other way around, just like our German level 3 pension. Whatever you invest cannot be deducted from your taxes. That's why you guys like to compare pensions level 3 with standard investment accounts. But that's a little apples versus oranges, because the ETFs in your German Roth IRA grow completely tax-free over the decades, while you have to pay the preliminary tax in investment accounts. But don't get me going about this again. So every dividend, every profit, every rebalancing happens completely tax-free until retirement in pensions level 3. And then when you finally made it, I have to admit that the US Roth IRA is better than the German counterpart. Because you had no tax benefits while investing, your payout is apparently tax-free when you withdraw after the age of 59 and a half. And you know how much I like tax-free. Here in Germany, private pensions level 3 offer tax benefits after the age of 62, and they come in 2 different forms. If you want a lump sum payout of whatever your ETFs have grown to, you will get a 50% tax benefit. So instead of paying 25% capital gains tax with ETFs and investment accounts, you pay only 12.5% in level 3 pensions. If you decide to go for the monthly pension, it's a little more complicated because the taxes will depend on the age that you decide to retire. Let's say you retire with 69, because it's a nice number. Then only 15% of your monthly pension is subject to tax and 85% will be completely tax-free. Let's make an example to see how incredibly low of a tax rate that is. Out of 100 euro monthly pension paid from the level 3, 85 euro are tax-free. Done. The other 15% are subject to tax with your personal income tax rate. So if you make more than 63k a year in retirement, your tax rate is 42%, right? We talked about it earlier. And 15 euros times 42% tax rate is €6.30 in the worst case scenario. With most people watching probably having a 20-ish% tax rate, you will pay €3 for every €100 pension you receive. 3% effective tax rate. Not as good as 0% in the US, but also not that bad. Where the German pensions are better than the IRAs in the US are the next 2 points, which are really surprising too. The first difference is that investment limits for all IRAs, both traditional and Roth, are $6,500 for people below 50 and $7,500 for people above 50. Don't get me wrong, that's a lot of money to invest for your retirement. But what about really high earners that have an expensive lifestyle they want to continue in retirement? These limits are really low compared to the limits here in Germany with more than €26,500 a year, no matter how old you are. And keep in mind that this limit applies to level 1 pensions only. There's no maximum investment in level 3 pensions here. And the second fact that was a little surprising and weird is that there's no flexibility in terms of what type of pension you can get in the US. Apparently there are income limits, and if you are above that, you cannot get a Roth IRA. If you earn above $153,000 MAGI, modified adjusted gross income, whatever that is, but it sounds really cool, you're not eligible for a Roth IRA. That's unthinkable here because Germany allows you to get almost any pension that you want, as long as you pay into the German public pension, of course, because that one is mandatory for employees. And these MAGI limits are a little funky too if you take a look at them closely. It's $153K a year for singles and $228K for married couples. Is anybody from the US watching who can explain to me why that is? Because in Germany, if a limit would be $153K for singles, it would be $306K for married couples. Anyway, what do we learn from all of this if you want to create the perfect retirement strategy for yourself? Level 1 pensions are a lot more attractive for high earners with a taxable income above $63K a year, because that allows them to invest in ETFs for retirement with a 42% tax benefit. With a lower tax rate, it's still profitable, but not as profitable, of course. And if you want a lump sum payout option and low taxes in retirement, a pension level 3 is more for you. Or you get both in order to combine the advantages, which would be my approach, because I'm not an either-or guy. I like diversification. And of course, the younger you are, the more profitable both pensions will be because of the tax-deferred growth of your ETFs that you get over a longer period of time, until you retire. Which means the perfect time to plan your financial future with us is now. So go ahead and book a free meeting with us or scan this QR code at perfectnext.de/meeting. Talk to you soon.